What's up, stock compounders? Brad here. So, I've been very active on Twitter recently. It's been actually a really interesting place to find other value investors. And one of the guys I've really been looking at recently is Chamath Palihapitiya. Okay, he's supposedly building Berkshire Hathaway 2.0, for tech. He runs a company called Social Capital, where he's very focused on kind of solving the most pressing issues of our time: climate change, healthcare, education. So it's really interesting, the stuff that he's sharing on Twitter and talking about on these interviews on TV. But he made a tweet recently, which got me very curious. It was on December 20th. And he said, I made 8 investments this year in the public markets. If you had bought every company on the same day I wrote about or IPO'd it, your return would have been 355%. My commitment to you is to continue to find investments, put a bunch of my money in it, and share them with you. So, you guys, looking at this number here, 355% in 2020, okay? Now, I had to know more. So what I did was I figured out what are these 8 public companies, and I ran the numbers. So let me take you to my spreadsheet. Okay. So here are the 8 companies that Chamath, public companies, kind of let people know that he was investing in this year on Twitter. Now, these are all SPACs, special purpose acquisition companies, where you see 2 different items here. For example, FVAC, that was the SPAC, and that SPAC acquired a company called MP Materials. So this FVAC became MP Materials at some point this year, ticker MP. So you can see a lot of these have already acquired a target company. Now, there's 3 that have not. IPO, D, E, and F. So what I did was I went through, first of all, I went through the last year of tweets from Chamath to find out, what are these 8 companies? Now, the 5 that actually acquired a target, he put out a 1-page investment thesis on. So you can go find that through his Twitter feed. If you want, let me know. I'll track those down, and I'll link to them in the description. But what I did was I went back and saw, okay, when these things first became publicly available, what could we have gotten in for? What was kind of the open price? And so I listed that here, okay? The kind of the first day of public trading. What could you have bought that for? And then I looked at the price yesterday on December 22nd. And that's what I've listed here, the price per share. So a lot of these are no longer with the original SPACs. So, it's a separate pricing history. But I, looked up whatever was most current for these, whether it was the SPAC or whether it was the company that was being acquired. And that's the price here in the today column. Now, in order to find out what return would I have generated, if I had bought in when it first became possible to buy in, and I had held on to, I looked up the price yesterday, so December 22nd. Keep in mind, Chamath tweeted this on December 20th, so there might be slight variation here, but probably not too much. So I'm assuming I put $1,000 into each one of these when I was first able to buy it. So the way I'm calculating return here is, what is the percentage gain in price from when I could have bought until, yesterday. And I'm just simply take that factor and I multiply it by this investment of 1,000 to get the value. This is what my holding would be worth as of yesterday. And then I add all these up to get $8,000, right? 8 companies, 1,000 each. I would have invested $8,000. And then I add all of these up. So with an investment of $8,000, I now have $13,848. So the return, the real dollar return from that is about 73%. So where is Chamath getting this number here, 355%? And I was digging around a little bit in the comments with that tweet, and it seems like Chamath is using a particular method of calculating return known as extended internal rate of return, okay, XIRR. And really what that does is, some of these would have been bought fairly recently, right? You couldn't have bought it until maybe the last quarter of 2020. So especially some of these ones that have done really well, like the 3X, the nearly 3X, those happened fairly recently when we could have bought into those. So the way that external rate of return, extended internal rate of return calculates these things is, it looks at what is the period of time when that return has happened and kind of extrapolates that over, all right, at that rate, what would my return be over an entire year? And I have a little bit of a hard time with that method of, calculating return. Because, okay, on paper, sure, that's my annualized return, but that's not money in my bank account, right? I can't really do anything with that. It's not real. It's kind of projected in a sense. So, I'm a lot more comfortable with this number. I think the real return here is around 73%, which is still pretty impressive. I'm not going to knock 73% in 1 year, especially considering, a number of these, my capital wouldn't have been put to work until, the last half or even the last quarter of the year. So, that's a bonus. But still, this is the real dollar return. So, not 355%, but 73%, still pretty impressive. One other thing I want to point out here, so of course I had to go through a year of tweets from Chamath, and he's a brilliant guy. There's no doubt about that. Whether he can build Berkshire Hathaway 2.0, I'm not sure, but he's definitely caught my attention. And a lot of I'm digging into companies that are helping kind of transition in regards to climate change, right? Decarbonization. And Chamath is very interested in solving that problem as well. There's a couple bets here, MP Materials and Desktop Metal, that he considers his climate change bets, his climate change investments. So, I may dig deeper into those in a future video. But since I had to go back through a year of his tweets, there was one that really caught my eye back on March 17th. Are people just realizing that after a few weeks of meetings via Zoom, you may also need Slack if you need to do work? Slack plus Zoom equals basic resilience for every organization starting now. Now, if that's not an endorsement for these two companies, right, for the investment case for these two companies, I don't know what is. So, in addition to these 8, SPACs that Chamath Palihapitiya was involved with, let's say we had seen that tweet and made that investment into Zoom and Slack on March 17th. So let's open this other tab here. You see Slack has more than doubled since March 17th. And Zoom like 3.7x, guys. It's very impressive what these two companies have done in just 9 months. So if you had included these two, right, which could have been perceived as, pretty strong endorsements from Chamath, and there weren't really any other public companies that I saw in that year of tweets from Chamath that had nearly this level of endorsement. So let's say we had invested in these two as well. That would have increased our initial investment to a total of $10,000 across these 10 different companies. And we're nearly at a double, okay, for 2020. So, I mean, based on this, I am very closely following Chamath on Twitter at this point. That's not to say I'm just going to buy whatever he throws out there. But it's, given me more respect for him as an investor. Clearly there are tailwinds behind SPACs. He's got a huge following on Twitter. I know he's got, he's kind of a celebrity in the realm of investing these days, particularly in the tech realm. But, I find it interesting, guys. And he's definitely a guy I'm following. Particularly, Charlie Munger and Warren Buffett, they don't have a lot longer that they're going to be making investments with Berkshire Hathaway. I mean, I think Buffett is 90 years old. Charlie Munger is 96 years old. So the idea of being able to identify a great investor who kind of thinks similarly as Charlie and Warren in terms of protecting the downside, all of those value investment principles. Berkshire 2.0. It's an interesting possibility, and so like I said, I'm watching it closely. But I'm curious to hear from you guys. Are you following Chamath Palihapitiya? Have you cloned him in any way in the past? I know he came out with his first SPAC that brought Virgin Galactic public in 2017. I haven't even looked at what that's done since 2017, but obviously a very high profile deal there. So with Richard Branson and other big names in that one. But anyway, it's very interesting. I'm keeping an eye on what Chamath is doing. But really the purpose of this video was to try to verify, 355%, is that real, or is that some kind of, financial engineering? I'm much more comfortable with this 73% number that I came up with. I think it's just a truer number in terms of what you would have generated if you were cloning Chamath in 2020. Again, you could make the case for Slack and Zoom as well, bumping you up to 97%. But anyway, guys, I'm going to be following Chamath very closely, and you'll probably be hearing more from me around what he's doing. I think I mentioned it before, but if any of you guys are on Twitter, do connect with me. It's interesting. I really overlooked Twitter for a long time. But there's some really interesting investors that I've started following on Twitter. And it's kind of actually a bad thing because, whenever I have a spare moment, it's like I automatically I open Twitter on my phone and I see what people are posting. It's so addictive. It may not be best for my productivity. But anyway, just wanted to share this about what Chamath has been up to in 2020. So with that, I will leave you guys, and I will see you in the next video. Take care.